Good morning, guys, and welcome to the Camp Financial Stock Market Update for July 25th, 2016. Before we get into the stock market, though, I want to go over kind of I guess it's a personal situation, a personal thing. So I was driving home from work last night and was involved in an accident and totaled my car. Nobody was injured in my car or the other car. But it just kind of makes me, helps to remind me to say, part of this podcast is about personal finance, not just investing in, I love stocks and I like talking about stocks, but part of it's about how you handle personal situations. When things happen, what do you do? What's your reaction? So, last night, knew my car was totaled, got out. The most important thing for me was to check on the other person, make sure that they were fine. She was already out of her car, and, we were talking. I tried to clean up the road as much as I could before the cops, got there to help divert traffic. I didn't want people, driving over stuff. Try to be, just a humble person and recognize your faults, my faults for sure, in the situation. And, then I came home last night and, I've been talking for, it's been quite a while that I've been talking about that I want to get a pickup truck. Well, guess what? I'm probably going to get a pickup truck. Not because, it's one of those things. I gotta have a truck or a vehicle to get to work, so I'm probably gonna end up getting a truck, and it's like not on the terms that I had planned, but it makes sense. Obviously, this car's done, so I'm gonna have to get something new, and but on that, it just makes me think, I'm not buying a new truck. I'm not buying anything new. I'm gonna probably spend $5,000 on a vehicle. That's probably about the most I'm willing to spend right now. But it just helps to remember. Make sure that you're thankful at all times for what you have, especially if you have the time to take to listen to this, or you focus on you do investing, you've got a lot of luxuries that a lot of people don't, and so it just kind of helps me to put into perspective as well, what I do with my finances, why I invest, is to, put a little buffer out there. And, right now I'm going to probably sell a little bit of investments to buy this vehicle. And, and I don't, I do have some liquid cash in a savings. Everybody should. I guess that's kind of where I'm going at here is, so I'm going to withdraw a little bit of cash that's sitting in my Roth IRA that I've put in there this year, because you can take that out with no penalty. You can take out what you put in with no penalty. Any earnings you have to leave, or you will pay the taxes and penalty on it. But I'm going to pull some of my Roth, take that money, go get this truck, and then we'll restart on trying to take care of paying off the bills, the debt that is sitting out there, and move forward. So sorry for the long story, but like I said, I think it's important to focus on being humble and appreciative of what you have, especially those of us that do a lot of stock market stuff probably have more money than most, or maybe not even that we have more money than most, but we recognize that the stock market's a way to make money. So if you're here listening to this, it always helps to keep a humble heart. So with that, let's pop over to the market. Take a look at the heat map in the S&P 500. Biotechs did well yesterday. Apparel stores were up huge, so I definitely need to take a look at that. They've been beaten down, and a lot of them they really have started to rally since, I want to say, February roughly. Kind of when a lot of the companies started to make a little turn. TJ Maxx, Macy's did well yesterday, Kohl's. So yeah, the apparel stores, the department stores, they all performed pretty well, which that's interesting. Like I said, it definitely is going to have to take a look at earnings out of that sector and see, have they figured out a way to battle Amazon and those putting the pressure on them from online shopping. Consumer goods, looks like there's a few consumer goods areas that had pretty good days yesterday. Processed and packaged foods, apparel and footwear, confectioners. So let's take a look, see who did poorly. Well, independent oil and gas, pretty much down across the board. Even the major oils, Exxon, Chevron, both down. The equipment services and the basic materials down. Schlumberger, Halliburton, and the pipeline companies down yesterday. So pretty much anything oil and gas related took a hit yesterday, with looks like maybe the exception of Valero. Valero might have been the only oil and gas refinery that had a positive day. So let's take a look. That's about it. I don't really see any other, bright reds, bright greens. I guess the discount variety stores also performed well. Target, Walmart, Costco, Dollar General, Dollar Tree. So it looks like all retail had a pretty good day yesterday. Now let's take a look. Let's jump out to the screener. Take a look at the S&P 500 first. We'll take a look at the worst performers in the S&P 500. While that's pulling up, I do want to say, so yesterday was 3 stocks that I'm in hit new highs, which new highs are always a good thing. Those were Marriott Vacations, VAC, EXC, Exelon Corp, and the third was SCAI, that's Surgical Care Affiliates. EXC, actually, funny enough, is in the oil and gas industry, so it's interesting that they perform well when everybody, that they hit a new high. They didn't necessarily perform well, they're pretty much flat, but in the face of all these other ones getting beat up. So yeah, so let's look at the bottom 5. Roper Technologies, Chesapeake Energy, Devon Energy, Newfield Exploration, and Cigna. So Cigna, obviously the healthcare plan, and Roper Technologies is in the diversified machinery world. And then the other 3, obviously all oil and gas related companies. So Roper Technologies missed on their forecasts yesterday, and that's what drove their stock down. Let's take a look at the ones that performed the best in the S&P 500 yesterday. Micron Technology, and then all of our apparel stores, Nordstrom's, limited brands, L Brands, Macy's, and the Gap, all were the top performers yesterday. It's funny, the Gap was one that I never bought it. We had a discussion. I was having a discussion with one of my friends on Twitter, and we were talking about the Gap, and it bottomed out and battled back and got above $18. Going into June, and I said, if it holds that $18 line, and it just kept bouncing around 18 bucks, and then finally it popped up one day to about 1870, 1880. I said right there, that's probably the catalyst to drive this stock higher on a technical basis. I mean, obviously there's fundamental things that were going on as well, but if you look at the technicals, you can tell that it's trying to find that support line right there around $18. It found it, it popped up. So if you'd have bought right there around 1870, since then the price it's run pretty much straight up. They've had very few down days, and it's now trading at $25. That's a $7 on, or $6.50 on 18. So it's about a 35% gain. I missed it. I said I expected it to happen, but I didn't pull the trigger. I didn't put my money in it, and you win some, you lose some, right? Sometimes you miss, and that's fine. Sometimes you look at something, you say, I think this is where it's going to go, and you hit it. But if you didn't put the money in, you're going to miss out on that gain. So we're trying to pull. There it goes. Finally popped over to the Dow Jones. All right, so let's look at the Dow Jones. Primarily a down day in the Dow. Obviously the Dow Jones average was down yesterday. The worst performers, Chevron and Exxon, followed by United Health, Apple, and General Electric. And Apple is going to continue to, I mean, they're range bound, 90 to 100, 90 to 100. It's just kind of running until they come out with the new iPhone. Don't expect more than $100 a share on the upside. It could drop below 90 on the downside, but I would not expect anything above $100 a share until there's some catalyst that drives this stock higher. Let's take a look. So there were 18 stocks down yesterday and 12 up. Obviously that's why the Dow traded down yesterday. And let's take a look at who performed well yesterday. Nike, as we already mentioned, DuPont, IBM, Microsoft, and Walmart, which was already mentioned as well. So Microsoft and IBM, both playing that old line, strong long-term tech companies. I like both of their companies. I definitely like what Microsoft's doing. Starting to get involved with mergers with, or not mergers, but joint ventures with some of the other growing tech firms, and it's going to be good, I think, for their business down the long, over the long haul. So that's it for today, guys. Take care. If you have any questions, send me an email, chrism@campfinancial.net. Leave a message on Twitter, Facebook. On Twitter, I'm @CMealik. You can put it right here in the YouTube notes, or you can find me on Facebook as Chris Mealik. So that's it, guys. Take care.